Hey everyone, welcome to 15-Minute Finance. We're trying to make money 15 minutes at a time. Today we're going to be looking at Planet 13 Holdings, which is by far one of my favorite stocks in my portfolio. Plan on buying this stock for a long time moving forward, and I think it's going to do great. So let's jump right in. All right, we're starting out this video with a beast of a chart. Look at this 1 year price chart of this company, 274% increase over the last year. That is just absolutely insane, and honestly, this just speaks to why this is one of my favorite companies in my portfolio. All right, looking at assets versus debts, we're going to see a common theme here, and that is this stock absolutely has a fortress balance sheet. So total assets are 6 times more than their total liabilities. That is just insane. This is a small company, okay? The market cap is only $1.3 billion, and it has 6 times the amount of assets to cover the liabilities. I mean, that's just incredible, right? And then looking at current assets, $141 million in cash. They only have $35 million in total liabilities and only $12 million in current liabilities. So that means that their cash is 11 times more than their current liabilities, and their cash is 4 times more than their total liabilities. So this is just an absolutely insane position to be in for expansion and investment. And as we'll see later on in the video, they have huge plans for both of those, and this is really just going to help fuel that. Taking a look at asset growth versus debt growth, 230% increase in total assets over the past 4 quarters. So 4 quarters ago, $66 million in assets. Now they're at $218 million. That is an incredible increase in assets, especially when you take into consideration that over this time they were dealing with COVID as well. 45% increase in liabilities over that same period. So assets are far outpacing the liability growth, which is just a great thing. And keeping in mind that this is a growth company and a small growth company at that, just to have this kind of ratio is incredible for their future, and it's really just going to fuel their expansion. So during this time, they're also opening a new superstore in Santa Ana, California, and they're trying to get through COVID. So 2 huge hurdles, right? They only have 1 superstore available right now, which is in Las Vegas. They're opening their second one, so basically doubling their amount of superstores, and they are increasing their assets at this rate. Is just crazy to me. So this is definitely a testament to their leadership to be able to keep them in such a strong position and not only weather COVID, but come out of it in a stronger cash position than they entered it in. Okay, so as you can see here, revenue has been pretty steady over the last 4 quarters, and it's nothing really to write home about. You would like to see a little bit more revenue growth from a growth company, obviously, but I think this is really attributable to the fact that they've hit their stride, they've found the efficiencies, they found how to make as much money as they can out of their 1 superstore. That's why it's so important that they open the second superstore as soon as possible and that it succeeds, because then their revenue is going to hopefully, ideally double, because they found those efficiencies. They know what works and what doesn't. So at the same time, cost of revenue and operating expenses are also relatively stable over time. So nothing really is changing. This is a steady company, and they're in a position to expand, but it's odd to say, but this is a stable growth company right now until they start hitting their stride and start actually carrying out that expansion. All right, taking a dive into the analyst estimates for revenue. So 34% growth quarter over quarter, and they're estimating 45% growth year over year. Now again, you have to keep in mind these are just estimates. They could be wrong, they could be more, and then they could be less. You never really know what's going to happen. This company is going to depend on the opening of the Santa Ana store and how that goes. So that's going to be a huge question mark. Right now, it's getting ready to open in the 3rd quarter of 2021. So hopefully all goes as planned, and we're going to see these revenues increase, as analysts say, if not even more. Taking a look at the total addressable market for this company and this product, 16 states are fully legal for recreational use of the product. 35 million Americans say that they are regular users of the product, and 55 million say that they have used at least once in the past year. Now, those kind of numbers are kind of vague and might not seem like a lot to you, but just for reference, there's about 40 to 50 million cigarette smokers in the United States alone. So the numbers for this product are basically matching, pacing with, and almost outpacing cigarettes, which is definitely a good thing for this company and a good thing for United States health overall. So a 2020 report from New Frontier projects that the US market is going to rise to $41 billion in 2025. That's a huge amount of money, and keeping in mind that this company is only at about $1 billion market cap, that is a huge pot to pull from for them, especially with their size and the position that they're in for expansion. New Frontier also estimates that by 2025, 39% of demand for this product is going to be met by legal means. So just the fact that only 39% in 2025 is going to be met by legal means just shows you how huge this opportunity is, how big this space is in the future for not only Planet 13, but all of the operators in this space. Even with the legalization that we'll have by 2025, this company projects less than half of people are going to be going to those legal companies, which, I think the number is going to be a little bit higher than this estimate, but it's a good conservative estimate. And again, it's just showing that there's a huge opportunity in this space for Planet 13 to take advantage of. For Planet 13, the opportunities are absolutely endless. So here you have the 2021 objectives. Obviously, opening the Santa Ana Superstore is going to be top of the priority list for them. They're saying that it's going to be Q3 of this year. So hopefully they're able to hit that mark. Originally, they said it'd be kind of Q2 region, but they missed that. But with COVID, there's going to be slowdowns. There's going to be delays. And with this company, you want them to do it right, and you want them to do it right away, because they really need to show that they can replicate this model in other areas, not just Las Vegas, because it's a tourist attraction, or let's go see the biggest operator in the world kind of thing. So they really want to show that they can do this, and it's not just a Vegas thing. It could be done anywhere. So the number 2 thing is a new superstore license for another tier 1 market. So that's just going to show investors, going to show Wall Street that this company is serious about the continued expansion of their operations. So especially if we see the Santa Ana store do exceptionally well right away, and then they also get another license to open another store in a big market, I think this company is just going to absolutely explode. The stock price is going to take off, and it's going to be huge for them. So the third objective that they outlined, and this is kind of the first time that I've seen them do this and even mention this strategy, is opening neighborhood stores in attractive markets. So the amount of superstores and the amount of cities that can handle the superstores is by its own nature limited. There's just not that many cities with the population and foot traffic to handle it. But if you start making smaller neighborhood stores for more local markets, then I think this company is absolutely going to take off, especially once they have several superstores across the country. Then you're going to have that name recognition, the brand recognition, and then if you then bring that to the local market, it's only going to be a good thing for Planet 13, and I think it's a huge opportunity that I'm really happy that they decided to kind of say that this is a path that we're interested in going down. Another thing that's great about this company is they are truly committed to vertical integration, and I really like companies that are vertically integrated. It just increases efficiency, cuts costs, and it's just better for the profit margin overall. So they're continuing to beef up their vertical integration. They've made several acquisitions to increase the production capacity, which will then fuel the growth of their in-house products and just increase the amount of products that they're able to create and then hopefully sell over the short, medium, and long term. So they can sell their own products to other retailers, not just solely to their own stores. So, there's obviously going to be competition in this space, and it shouldn't be something that's looked at as a negative, but the more stores there are, that's just the more customers that Planet 13 can sell its own products to. So one thing that really sets this company apart is they are really the only operator that has created a superstore model in this space, and it's been highly successful. The past couple months, they've just been putting up record numbers of sales at their store in Las Vegas. So this is a really unique company in that they're really the only one with that superstore. They also create their own in-house products, which they can then sell, again, like I said, to other stores, and they can sell on their own. So you have the regular version of the product, vapes, food, beverages, which I think are going to be huge because it kind of takes away the stigma of the product a bit, and then topical like creams and lotions and things. So the last moat that this company kind of has is the fact that they are providing an experience. And Expedia actually came out with a poll saying that 74% of Americans actually prefer and rank an experience to being greater than a product. So they would rather have that experience rather than just going in and buying something. And if you look at some of these pictures of Planet 13, it is just an absolutely beautiful store. The displays are crazy. It's meant to attract people, and it's meant to keep them in there for a long period of time and have them continue to spend money, which just makes them more revenue. So they have restaurants, coffee shops, displays, and that all just adds to the overall vibe and experience of the store itself, which again, like I said, no one in the space has really replicated yet. And the most important part of looking at any company is looking at the risks. So number one overall, legalization. It needs to continue, and if it doesn't, then again, this company is kind of doomed to fail. With the current administration, I do see that legalization will continue. With COVID, states are even more incentivized to get some of that tax revenue from this product. And honestly, I don't see legalization as a huge problem, but as definitely one of the biggest risks to the company if legalization does not continue. The second one is inadequate sales at the superstores to support the cost of running those stores. So these stores are absolutely massive and they cost a lot of money to build. So if they aren't able to sell at a rate that actually justifies those costs, then they're going to have to quickly pivot to that smaller store model. And there's really not a lot of differentiation. There's not a lot of moat that they can create in that smaller model. So the superstore has to succeed in order for this company to succeed, and we will really get a good visual of that whenever Santa Ana opens up, and then we actually start to see some numbers come in through the quarterly results of that store as well. So what are my thoughts? Why does it matter? Who cares, right? So I think that the legalization trend is only going to continue, especially with the current administration in place. I don't think you have anything to worry about in terms of legalization. But they need to continue to solidify the vertical integration of the company. You need to increase your production capacity. You need to keep coming out with new brands, new products that you can sell, something that's new, something that's trendy. And you really have to take that data from your superstores, see what's selling, and pump money into that. They're in a really unique position where they know what is selling in their stores and they know what doesn't sell. So if they have that data, then they can push money and investment into the products that work and just continue to do that. So use that data that they have to just create the best experience and the best products that they know people are gonna buy. The biggest risk of all, and my thought on it, is Santa Ana. If this company cannot make Santa Ana succeed, then they have to make the small neighborhood store model work, because they're built right now on the superstore model. And if that fails, then the stock price is probably going to take a huge hit, and they're going to have to basically start from scratch and figure out a way to make this neighborhood model work, which, who knows, it might not work at all. There might just not be enough differentiation between them and any other retailer. But right now, their bread and butter is a superstore, and they need to be able to have that work. So being a small company does help in this, in that if it does fail, hopefully it doesn't, then they can quickly pivot to a different product or a different type of store, like the smaller neighborhood store. Whereas if they were a larger company, maybe not be able to do that as well. So that kind of plays into their favor. But again, we really need to watch the Santa Ana opening. So overall, this is just a home run stock for me in every sense of the word. If you're a little bit more cautious, then I would wait for the Santa Ana store results to come out, but just be warned that you might be entering at a much higher price than it is right now, especially if Santa Ana comes out with some strong numbers. So this is a stock that I've been buying for a long time on dips especially, and anything close to $6, under $6 especially, is where I would be buying this. All right, so that's the video. Thank you guys for tuning in. Again, this is a new channel. Check out my DraftKings video that I just came out with. Like, support the channel, you can comment, you can subscribe. All of it helps. This is a new channel, so I'm just trying to grow slowly. I put out content like this once or twice a week. So hopefully by the time the next video comes out, we all would have made some money. All right, thanks for tuning in.